Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're doing Is It a Buy? And we are doing Tesla stock. So Tesla stock has almost the most entries every single week, so I'm amazed Tesla hasn't been picked out of the hat yet, but it finally has. So I'm going to be doing a deep dive into Tesla to see, is it a buy? Now, Tesla seems to get a really emotional reaction out of people because of Elon Musk, and a lot of people think Elon Musk is either the greatest thing since sliced bread and he's a genius and he's the next Steve Jobs and blah blah blah, or people hate his guts and they think he's a scam artist and all these other kinds of things. So he just like, I don't know, brings out a lot of emotion in people. So it'll be interesting to kind of go through Tesla today and look at it in a non-emotional way. We're looking at this strictly as, is it a good investment or is it not? And it's as simple as that. Now, before I get into the video, leave in the comments section what stock you guys would like to see broken down next time on the Is It a Buy series, and hit that thumbs up button if you guys enjoy these type of videos. So let's get into this now. Tesla. Now, we're acting like we always do. We have no clue what Tesla is. So we go to the 10K that's located on the Tesla Investor Relations page, and we're looking at the first portion, which is the business portion, to find out what is Tesla. So Tesla, we design, develop, manufacture, and sell high-performance, fully electric vehicles and energy storage products. We have established our own network of vehicle sales, service centers, and supercharger stations globally to accelerate the widespread adoption of electric vehicles. Our electric vehicle engineering expertise and business model differentiates us from incumbent automobile manufacturers. And the next sentence we're going to also read, we currently produce and sell two fully electric vehicles, the Model S sedan and the Model X sport utility SUV vehicle. Both vehicles offer exceptional performance, functionality, and attractive styling. We commenced deliveries of Model S in June 2012, so a little over 4 years ago. And as of December 31st, 2015, we have delivered over 107,000 new Model S vehicles worldwide. We have continued to improve the Model S by introducing performance, all-wheel drive, dual motors, autopilot systems, things like that. So basically, Tesla, wrapped up into a nutshell, is a electric vehicle car manufacturer. And if you've ever seen a Tesla, they're pretty sharp looking. They're extremely fast, like 0 to 60 in 2.3 seconds or 2.5 seconds, something ridiculous like that. And they're really cool cars. If I had the money, I would probably buy a Tesla, but that's a whole different subject there. So they're really cool cars. They're all electric. They have the huge screen. If you've ever been inside a Tesla, you'll see right in the middle, it's just a huge screen, no engine, nothing like that. It's all electric. It's pretty cool. So let's move on to the next section here and look at the three type of models they either have currently or they're going to be making. So they do a Model S, which a Model S is a fully electric 4-door, 5 adult passenger sedan that offers compelling range and performance with zero tailpipe emissions. Model S offers a range on a single charge of up to 288 miles, as determined using the United States EPA combined 2-cycle city highway test. So you can get most places on one charge of the Model S. The next model up they make is called a Model X, and this is the SUV vehicle. This gets a range of around 257 miles, and this can accelerate 0 to 60 in 3.2 seconds, which is ridiculous for an SUV. We're talking about an SUV. 0 to 60, 3.2 seconds. That's faster than most supercars. That's ridiculous. I used to have a 350Z, 2006 350Z some years back. That did 0 to 60 in like 5.9 seconds, I believe. It was even an upgraded model. That freaking SUV would dust my old 350Z. That is ridiculous. 0 to 60 in 3.2 seconds. And then the Model 3 is the big car for the future for Tesla. Now, this hasn't been launched yet. We have also publicly announced our intent to develop a third-generation electric vehicle called Model 3 to be produced at the Tesla factory. We intend to offer this vehicle at a lower price point, which they say is supposed to be around $35,000. We'll see. And expect to produce it at higher volumes than our Model S or Model X. We plan to unveil Model 3 in March of 2016, which they did, and expect to start production and deliveries of this vehicle in late 2017. Now, there's some talk it might be pushed back to early 2018 actually now. We'll have to just see, but that's the car that will ultimately make or break Tesla into a huge growth engine in the future, or just kind of stuck there, because up until now, Tesla's been pretty much a high-end car manufacturer. You know, you're talking $70,000+ to get your hands on a Tesla, whether you're looking for the SUV model or the Model S. Now with this Model 3, if that comes in around $35,000 or so, that's a car that most Americans can afford, most Europeans can afford, massive amounts of Asians can afford. So you're talking about, a worldwide car that most people could actually afford. So that is going to be the car that's either going to make Tesla and send them to the moon, or break Tesla and, they're just stuck in the high-end luxury market. So we'll have to see how all that plays out. We'll get into that more in the future here. So now we're looking a little more into the whole general section, and I found some really interesting things that I think give Tesla a super competitive moat around the business and give them a lot of protection. So the autopilot systems, we have developed an expertise in vehicle autopilot systems, including auto steering, traffic-aware cruise control, lane-changing automated parking, driver warning systems, and automatic braking functions. This is amazing. This is amazing stuff. This is stuff I thought I wouldn't see in my lifetime until I was much, much older. And I see it on the road every day. There's a lot of people that drive Teslas in my particular area. And it is so cool to see that, some of them are not even literally driving it. They're like paying attention kind of, but they're not even, their hands aren't on the steering wheel, and it's doing everything for them, including changing lanes and stuff. I'm like, I've seen pictures of people asleep at the wheel and the car's driving itself. Are you freaking kidding me? And these are cars that are out now. These aren't like, oh, this is something we might have coming out in the future. These are cars that are on the market now, on the roads now. It is freaking amazing the abilities their cars are doing out there right now. And now they just announced a new upgraded system that's even better than the last one. Now that's a whole controversy, because a lot of Tesla owners who just bought Teslas are mad because they cannot upgrade to that new package. So there are a lot of Tesla owners who are pissed about that, because the new package is like way more advanced and just ridiculous. So I think this is something that's huge. It's one thing to be an electric car manufacturer and manufacture electric cars that are ridiculously fast and all those kinds of things. But when you have autopilot systems, you have the jump on everybody as far as technology. I don't see anybody else manufacturing cars in any type of significant way that have autopilot and or electric. This is ridiculous stuff that Tesla's doing here. Now, I also highlighted that they have company-owned stores and galleries, which is very interesting, because most car dealerships are independent and those kinds of things, and they sell cars, but Tesla operates all their own company stores. Now, next thing I want to look at here is the Gigafactory that's located in Reno, Nevada. Now, this is a massive warehouse type deal they're building out in Reno, Nevada. We're developing the Gigafactory as a facility where we work together with our suppliers to integrate battery material, cell, modular, and battery pack production in one location. We plan to use the battery packs manufactured in the Gigafactory for all our vehicles, for all our Tesla energy applications. We broke ground on the Gigafactory in June 2014 and began assembling our Tesla energy products in the first portion of the facility in the fourth quarter of 2015. So a little less than a year ago, they started actually producing things. We currently expect to produce cells at the Gigafactory beginning in 2016, so that's this year, for initially in our Tesla energy products and later for our vehicles. The Gigafactory is currently expected to attain full production capacity in 2020, which is anticipated to be sufficient for the production of approximately 500,000 vehicles annually, as well as for the production of our energy storage products. By that time, we expect battery pack production capacity to reach 50 gigawatt hours Of this, we expect 35 gigawatt hours of cell production capacity at the Gigafactory and purchase 15 gigawatt hours of cells from our other manufacturers. So this Gigafactory is just a monster. I'm probably going to be showing you a picture on your screen currently of what that Gigafactory looks like. It is massive, and it's not even close to being finished being built yet. They have a lot more still to be built. It's multiple floors, and the sheer size of it is ridiculous. Absolutely ridiculous. Now, this is supposed to drive down their cost a ton once they finish this, because then they can start producing at a huge rate, and then they can also start selling vehicles at a huge rate. You heard them, 500,000 vehicles plus they're expected to do annually by 2020. I see no problem why they can't when they're building a production facility as big as this one. Unbelievable. This is another type of competitive moat thing they're doing that's costing billions of dollars that just not everybody can do, to be completely honest. Now we're in the risk factors section. It's always very important to pay attention to the risks in whatever investment you're looking at. We may experience significant delays or other complications in the design, manufacture, launch, production ramp of the new vehicles such as Model X and future vehicles such as Model 3, which could harm our business, our brand, business prospects, financial condition, and operating results. This is by far, in my opinion, Tesla's biggest risk factor. Because you look at the Model 3. The Model 3, they've taken hundreds of thousands of pre-orders on the Model 3, right? And each person had to pay $1,000. People are expecting to receive those in late 2017, early 2018. What happens if that car, for some reason, gets pushed back to 2019, 2020? How mad do you think those people will be? And how bad do you think that will hurt Tesla's reputation as a company that just cannot deliver anywhere close to the dates? They take people's money, and then they're just, the people are waiting for their car and waiting for their car and waiting for their car, and they never get it. So this is the biggest risk factor, in my opinion, because it just can affect their business in a very harmful way. And imagine the amount of negative news publicity they would get behind this. So this is a huge risk factor, in my opinion. So now we're looking at the Model 3. So now you get a little glimpse of the Model 3 there, which I should have given you a little glimpse earlier. And this is talking about recently Tesla has updated its Model 3 website, letting new pre-order customers know that any orders placed from now on will ship in mid-2018 or beyond. So anybody that now wants to purchase a Model 3 or puts a down payment or whatever, they're not going to get it till at least mid-2018, if not later. So this kind of shows that maybe they're having some problems, or maybe they're just having problems keeping up with the demand, because the amount of demand they're getting is simply amazing. Look at that. Pre-orders from Tesla number were well above 400,000. More than 400,000 people dished out $1,000 out of their pocket to put a pre-order on this car. When have you ever heard in your life of people putting a pre-order on a car? Are you freaking kidding me? This isn't an iPhone. This is a car. This is $1,000 for a pre-order on a car that you might not get for a year, 2 years down the road. And over 400,000 people did it. That speaks to the brand that Tesla has. That speaks to the excitement that Tesla's building. Unbelievable stuff. It's unbelievable. Now let's go ahead and look at that income statement. We got to start digging into the financials. Now at this point, just so you guys know, I'm very thrilled with Tesla. I think Tesla is absolutely the car manufacturer of the future. I think they will dominate it in something close to what Apple dominates the smartphone market. I think Tesla will come close to dominating the car market. Now, it's a huge, bold statement out of me, and people laugh at me and they say I'm crazy for thinking that, but I just think it will happen. I really do. I think the amount of excitement around it, I think the things they are doing with electric and how fast the cars are, and the autopilot systems and the Gigafactory, they're so far out of it in front of everybody else that it is unbelievable. And they always have this type of brand recognition over everybody else. So the business model, I absolutely love it. But we got to dig into the financials, because if the financials don't make sense to us, might not be an investment for us. So let's check this out. So all the way in the right-hand side, you see 2013, they did $2 billion in revenue. The next year, they did over $3 billion. The next year they did over $4 billion, which was last year. So revenue has doubled in basically 2 years. 2 years of revenue's doubled. Now look at that net income. That's ugly times ugly. They were losing $74 million in 2013. They lost $294 million in 2014, and now they lost $888 million. So as revenue has taken off, net income has just gone down and gotten worse and worse and worse, and the losses are just getting bigger and bigger as the years have gone on. Now the question is that going to happen in the future? Is this going to be $1 billion loss the next year and then $2 billion? How far does it go? So that's a huge issue, because then they could just keep burning through cash and then run out of money as a company. Will that happen? We'll just have to see. Now we're looking at this balance sheet. Very important to look at a balance sheet that's burning. Well, very important to look at a balance sheet no matter what, but a company that's burning money like Tesla is very important. So $1.2 billion they have in cash and cash equivalents. They have no short-term investments. They have no long-term investments. Let's go ahead and look at, they have short/current long-term debt of $633 million. They have long-term debt currently of a little over $2 billion. So basically, it's not a good balance sheet at all. I do not like that balance sheet. Whenever you have way more in debt than you do cash and investments, I think that's a very negative sign. So I would rate this balance sheet a bad one. It's certainly not the worst I've ever seen. It's certainly not a balance sheet that the company's going to go out of business anytime soon, but it's not a good balance sheet at all. It's below average. It's a poor balance sheet. Now let's go ahead and look at the latest earnings. So this is the earnings that were announced a couple weeks ago. For the 3 months ended September 30th, 2016, Tesla reported net income of $21.9 million. How the heck they swung to a profit, I have no freaking clue, but they did it somehow. When I just saw they lost $888 million last year, I have no clue how they made a profit in this quarter. Or 14 cents per diluted share after reporting a loss of $293 million, or $2.09 in Q3 2015. Holy smokes, what a turn. That's ridiculous. The Palo Alto-based company earnings adjusted for stock option expense came in at 71 cents per share, which is really high, smashing analyst forecast of a loss of 54 cents. Total Q3 GAAP revenue was $2.3 billion, up 145% from Q3 2015. Revenue results also beat the street's forecast of $1.94 billion. The company's total Q3 gross margin was 27.7% compared to 21.6%. So as we can see here, guys, Tesla is in a huge growth mode right now. Huge growth mode. They just grew revenue by 145% year over year. And they went from a huge loss, a monster loss the year before, to actually eking out a decent profit. That is ridiculous. That's one of the biggest turns I've seen in a company in quite a while. So, taking in the financials so far, income statement great, balance sheet not so good. The latest quarter, blockbuster numbers, they beat everything. So that's good. Now guidance, Tesla reaffirmed its guidance on 50,000 new vehicle deliveries for the second half of 2016, with Q4 2016 plan of just over 25,000 vehicle deliveries. The company has projected a 2 to 3% improvement in automobile gross margin on a GAAP and non-GAAP basis by the end of 2016. So basically, they're expecting to get higher margins on the vehicles now. So which means they're either bringing down cost or people are trading up to more expensive packages. It's hard to know. I'm assuming they're getting their costs down, and cost down as that Gigafactory gets built out, and they just find ways to save some money here and there that won't end up compromising in the quality of the vehicle. I'm assuming that's the deal. And also, the bigger you get, the more leverage you have going against your suppliers when you're negotiating deals. So if Tesla was producing 10,000 cars a year and they were buying 10,000 of a specific part, they don't have much leverage there. If they're doing 100,000 cars a year, then you start having some leverage and being able to get that price down from those suppliers. If you start doing 1 million cars a year, you have a huge amount of leverage, because at that point you could be such a big portion of a supplier's revenue that you can get down to the brass knuckles on that one and get prices extremely low. So Tesla, as they get bigger, they're getting more and more leverage against suppliers, which then can mean they can get better margins and margins as time rolls on. So that basically covers the latest quarter, really good quarter. Now, this is more recent news. This is from August 1st, so a couple months ago. Tesla on Monday said it reached a deal to buy Solar City for less than the price it originally proposed, as Elon Musk takes the next step with his plan to combine his electric car and solar energy companies. The all-stock deal values Solar City for about $2.6 billion, with Solar City stockholders receiving 0.11 shares of Tesla for each share of Solar City, valuing them at $25.83 a piece. So Tesla's trying to do an all-stock deal for Solar City, and basically the thought process behind this is, the original thought process is they want to build out Solar City's business and make the roofs beautiful, and they have these little tiles that can go on your roof, and they're little solar panels, basically, each little tile. And you see a picture there I have on your screen, and it just looks kind of pretty, actually. It looks like a pretty roof, well done. And so it's not like those ugly old solar panels of the past that would look on your roof and you're like, oh, it's those big black looking tarps, and they were just so ugly, man. This actually looks really pretty. You can't even tell really that's a solar roof. It almost looks like just regular tile roof. So the thinking is that Elon Musk wants to build out Solar City's business by making beautiful products, and then that can gather excitement and make people excited about these roofs, and then they want to put them on. Now, there's one background reason that he could have wanted to do this also. He may be wanting to make all the roofs of all his Tesla vehicles solar panels. So then you get a lot bigger charge out of each ride you get in your Tesla, because the sun's hitting your roof and that produces energy at that point. Now, I haven't seen anything publicly where he said that's one of the reasons, but there's a lot of rumors about that, and I absolutely think they'll do that in the future. If you can make a transparent type roof on the Tesla, but it can also be all solar, so the solar panels can collect energy, then you get a way larger charge time out of each ride. And then instead of having to charge your Tesla every single day or every other day, you might have to charge it once a week, kind of like you gas up maybe once a week. And it makes the process a lot more seamless and a lot better. Also, solar's free. Of course, when you buy the car, the solar is probably going to be even more money. But, you know, if you plug that into an electrical outlet, that's going to cost you money from your home. If you're getting sun from the sky, that costs you nothing. So this is another huge deal. And the more I've thought about it, the more it makes sense. When I first heard about it, I was like, what the crap? Why? Why? You're already, spending a lot of money on Tesla. You guys have such things going there. But now the more I look at it, I'm like, this might actually be a great idea. Great idea. Now, let's look at the basic statistics on Tesla. The shares closed out at $190 on November 4th. That's when I took this screenshot. The one-year estimate's $231 from analysts. Who knows, what the shares will be at. Now, the shares are kind of in between the 52-week range, so they're at $190, but they went all the way down to $141 at one point, and they went all the way up to $269 at one point. So they're kind of a little more toward the lower end of that range, but still kind of toward the middle. They have a $28 billion market cap, and obviously they have no PE because they lost a ton of money last year. So, where am I at with Tesla? This is such a hard stock for me. It's like, this is like the thing I hate about investing, because I love their business. I absolutely think they will be the dominant car producer in the future. I absolutely believe in the vision of solar roofs and that they're going to expand that business to be a huge business. But the financials are so whacked out. I have no clue how profitable they will be over time. And it's just too much of a question in the next couple years. I'm a long-term investor, but at the same time, when I see a balance sheet like I did in the financials, in an $888 million loss last year, I saw a quarterly profit this past quarter, but are they going to really be able to keep that going? I'm very unconfident in the whole financials of this business, which make it not a buy for me. It's not a buy for me, and that hurts me to say it because I love their business so much. It's the same problem I have with Amazon. I've loved Amazon for years and years and years, and I've absolutely believed in their future and that they're going to dominate retail, and that's exactly the thing that's playing out. and their stock price has just gone up and up and up. But I've never been able to get behind the financials of Amazon, the extremely high PE and all those kinds of things. So I've never been able to get behind Amazon. It's just never been a stock for me. Unfortunately, it's gone up a ton, and people that have been in the stock have made tons of money, and that's great, and I'm happy, and I hope people do with Tesla. But for me personally, in my investing style, I cannot get behind this one. I cannot do it. I hope you guys enjoyed this video today, guys. Hit that thumbs up button if you enjoyed this, you like the Is It a Buy series, and leave the comments on what stock you want to see broken down in next week's video so I can break that one down. Subscribe if you haven't. I talk a ton about personal finance on this channel, entrepreneurship. I'm an entrepreneur, and I also talk so much about the stocks and do this series, Is It a Buy, every single week and sometimes twice a week. Thank you for watching, guys, and have a great day.